Every major crypto was down between 30 and 50% from the last 30 days. It feels like there is no end in sight. Sentiment decreases and I can feel the negatively creeping up again. I have invested around 20% of my net profit from my dropshipping business in the crypto, so I want to share with you what I'm going to do some money, and I will share this experience with you today in my video. Before we go into my PC, let's talk a little bit about crypto and about commodities, because I received some messages about this, whether you should actually be worried for the long term, and some actions that you can take today to increase your profits. I know that's not fun losing money, but we're going to give you some strategies. As well, you know, I told you guys that some of these protocols may potentially go to zero because there are the transportation layer and there may not be much value in simply transferring data around. Then these are commodities. Now we are seeing Ethereum, for an example, that are actually backed by utility. To people need Ethereum to transact on the network, or they just go for another L1 or L2 network that's going to be faster and much cheaper. And so could Ethereum drop another 20, 30 or 50%? It could. Everything in tech is not going very well last month, to be honest. Even this is generally considered the safe bet in investing. This situation is essentially the result of unclarity. Investors are waiting for earnings calls to come out this week and some policy decisions from the Federal Reserve that may tighten up moderately policy just a little bit. Investors are considered that the Federal Open Market Committee, the ground that decides interest rate, will bump up rates quickly to fight against inflation. If rates do jump up significantly, this has the simple downside. It will be more expensive to borrow money. This matters in stocks, exceptionally high growth stocks, because they are borrow money in order to grow at a rapid pace. So it makes sense that growth will slow it, borrowing costs of money increase. Now, it's unlikely that the FOMC will decide to all of a sudden hike rates dramatically, as they know this would cause absolute chaos in the market. Instead, it's much more likely to set a target date in which rates will slowly increase. But how does this relate to crypto? In times of fear, investors, especially big institutional investors, will move money to safer asset classes in anticipation of future drops in the market. This complicated situation means that rebouncing occurs, more money is pulled out of crypto and out of speculative assets and even non-speculative stocks and moved into more safe assets. Then we have the added impact of Russia. The Central Bank of Russia recently came out with a report titled Cryptocurrencies, Trends, Risks, Measures. In this report, cryptocurrencies are compared to the Ponzi schemes, and there's a call of this outright ban through Russia by the Bank of Russia. And this has caused a little bit of an uproar throughout the world of crypto and hurts market, as investors who are already on the edge of their seats worried about crypto received this confirmation that this may be a perfect time to go ahead and exit the market for a little while. However, it's turned out that the report's opinion were not a consensus. The ban is not finally accepted in Russia. Others have said that a ban of this magnitude would be virtually impossible, which I have agreed with. I mean, someone could use a VPN in Russia and still use crypto. If they wanted to do it, they will do it. To me, this is something to keep an eye on, but this doesn't feel like something that should keep you out of the markets entirely. Of course, none of this is financial advice. In crypto, another way to jungle fear in the market. Besides the oblivious of just looking at price charts, the seeing bloody red price decreases. You can gain some insights by looking the market caps of stable coins. In times of uncertainty, people will move some of their crypto positions to assets pegged to the dollar stablecoin. This is a money-making strategy that I will talk about in just a minute. But if we look at the market cap of USDT, MIM, USDC, we can see that they have all had dramatic increases in the market cap in the last month. So this leads us to the question, is this the end? Is this the long, dark, cold bear market that we've been worried about? To better understand, I think we should look adoption instead of the prices pretended that coin market cap doesn't exist, and ask whatever blockchain technology was being used more today than 6 months ago, more today than a year ago. Is it trending upwards? The answer of this question is important because in the long run, the value of the crypto projects will be determined by the value of that they provide. Is this technology being used? Where are the trends leaded? So let's start with the NFTs. Trading volume for the NFTs are over 10 billion in the third quarter of 2021, up with 700% from the previous quarter. In addition, Facebook and Instagram are finishing a feature that will allow users to display NFTs to the social media profiles. Coinbase will soon accept credit card payments for NFTs. This change means you don't even have to deal with the crypto to buy an NFT. Some say that is a double-edged sword. They don't like it, but others think it's a fantastic news for the average investor, that average person to get into NFT. Now, play to earn games. In Axie Infinity alone, there was 5.5 billion looked in virtual assets in November in a single game. Crypto games are gaining traction, they are getting more fun, they are getting more users, and they are even gain popularity of Twitch, and this is even though crypto gaming has only 18 billion industry market cap. That's 1/6 of the size of DeFi and more than 100 times smaller than regular video game industry. Now, what about DeFi? Accordingly to DeFi Llama, the current total value market is 290 billion of DeFi. Now, DeFi 2.0 was fantastic innovation, however, it simply was not used friendly enough for the average investors directly with DeFi 3.0. Think like DeFi as a service or just more usability in the space. Projects can appeal to your regular investors who doesn't have the time to learn the ins and outs of yield farming or anything having to do with DeFi. Increase the usability means an increased scope of people who can do these products, thus increasing the market cap for DeFi and crypto. Then more broadly, we are seeing more and more institutional investors embracing cryptocurrency. We have seen large corporations adding crypto to their balance sheets and countries being to accept Bitcoin as a legal tender. This has largely all happened in the last year, so it's safe to say that the industry moving in the direction of adoption, despite prices declining in the recent month. I think we could have a completely different conversation if we could see this dark price chart. Now, this isn't me saying that you should dump your entire life saving in crypto for that. It's some risk-free bet. That's not what I'm saying at all. I'm just saying actual use metrics seem to be increasing, and that will matter in the long term. Now, from here, let's talk about how you can make huge profits during the bear market. There are two stages that I would like to discuss here. I personally use and have much seen success with. The first is simply buying the dip. Now, this is a bit oblivious, but you need to be a little bit more tactful than just hunking your money into projects and crossing your fingers that the market turns. Now in times like a current market, buying the dip can feel like you're straight up truth crash into bonfire. I've been buying and it feels like that. And this is a bonfire that's slowly consuming your home. But the reality is, if you believe blockchain technology is here to stay and it's here for a long term, then there is no reason you should believe that prices will not eventually go up in the long run. Now, I have no idea where prices are going to be in the next month, but I do know that buying Bitcoin today I actually less risky than to buying it at November for $60,000. That is, you think crypto has long-term staying potential. My strategy is to buy the dip and to focus on the ultra speculative small cap cryptos for now. Instead, I will focus on the largest crypto, that largest layer that I believe have the most staying potential. The simple reason for this is diversification. Buying a layer 1 is like buying a farm with 50 cows instead of buying a single cow. A single cow can die, or maybe it's a mastiff. I used to work on a farm, but the point is, chances are if you own the farm, you are not going to lose all 50 cows. If your layer 1 has 50 projects built on it, then you are going to be okay. If one of those projects goes under, and when money begins following back into the crypto space, you will be the first one to see gains. More following into space typically seems to go in disorder. Bitcoin first sees some gain, then Ethereum, then other large layer 1 blockchains, and then smaller cap projects will potential, and then you can see the speculative crazy type projects gaining steam. It seems to go in that order most time in terms of how much I'm buying. I've already purchased quite a bit, but I always leave money on the sidelines ready to seize any massive dip opportunity. So let's say I had $1,000 to buy the dip. I maybe will use 300 today and then will buy 100 every 5 days until the money runs out. Unless I see the dip in the market even further, in which I may double the buy that day of the $200. Dollars cost average will help flatten out the volatility. Now, the good part is you can still make money with the money that you have on the sidelines. This is good either to put that cash serve to work, or if you are thinking buying the dip, that's too risky for me right now, I simply lend out my stable coins away. With this you can earn some nice passive income and you don't have to worry about 30% consideration in the price because of pegged to dollar. Comment below. Thank you so much.